Up everyone, we're going to talk about another market myth. This one is related to short interest. We're going to talk about it, what it is, what it isn't. This is a document from FINRA. I will link it below so you can take a look after the video if you'd like. Let's go ahead and get into this real quick. Okay, so to understand what short interest is, we should first talk about short sales, which we just did briefly a minute ago. Put simply, a short sale involves the sale of a stock an investor does not own. When an investor engages in short selling, two things can happen. If the price of the stock drops, the short seller can buy the stock at a lower price and make a profit. If the price of the stock rises, the short seller will lose money. An investor may engage in short selling for many reasons, such as to profit from a decline in the price of a stock or to hedge the risk of another position. To open a short position, an investor places a short sale order with their brokerage firm in a stock that the investor does not own. This is done in a margin account. Because the investor does not own the shares, the brokerage firm will do and look to locate shares prior to executing the short sale. Now, does that always happen? No. We'll get into that a little later. These shares may be identified in the brokerage firm's inventory, the margin accounts of other customers, or another source. Once the trade is executed, the investor's margin account will show the proceeds of the sale. Ultimately, the investor must obtain these securities to close the position. Until this occurs, the investor's account will reflect a short position. To close the position, the investor can purchase the stock in the market, which they hope will be at a lower price than they sold the shares short. That's short selling. Now, short interest is a snapshot of the total open short positions in a security existing on the books and records of brokerage firms on a given date. Short interest data is collected for all stocks, both those that are listed and traded on an exchange and those that are traded over the counter. FINRA and U.S. exchange rules require that brokerage firms report short interest data to FINRA on a per security basis for all customer proprietary firm accounts twice per month, around the middle of the month and again at the end of the month, similar to FTDs. For stocks listed on a U.S. exchange, FINRA shares the data with the listing exchange, which is then responsible for making that data available to the broader investing public. In the case of OTC stocks, FINRA publishes that information for free on the over-the-counter equities page, which I will link below. But yeah, the scheduling for short interest is right here. You have a schedule for the rest of the year. We had one last year. Something to keep an eye on right here, because a lot of the runs, if you go line up the dates from 2021 and GameStop and AMC runs, a lot of these dates here line up with that. So keep that in mind. Now, in addition to short interest data, FINRA also publishes short sale volume data, which I will also link below if you'd like to take a look. The daily short sale volume data provides aggregated volume by security for all off-exchange short sale trades. This is off-exchange. This data excludes any trading activity that is not publicly disseminated and is not consolidated with exchange data. Some market participants mistakenly conclude that the bi-monthly short interest data is understated, because the short sale volume daily file reflects volume that is much larger than the positions reported as short interest. However, short interest position data does not and is not intended to equate to the daily short sale volume data posted on FINRA's website. Because again, it's two different things. Here's the what it looks like when you go on FINRA's website. This is their consolidated NMS short sale reporting data. They post this daily. I'll link that below so you can take a look if you would so choose. Now, the short interest data is just a snapshot that reflects short positions held by brokerage firms at a specific moment in time on 2 discrete days each month. The short sale volume daily file reflects the aggregate volume of trades within certain parameters executed as short sales on individual trade dates. Therefore, while the two data sets are related in that short sale volume activity may ultimately result in a reportable short interest position, they are not the same. So if you're thinking short volume and short interest are the same thing, they're not. They're completely different. Short volume is not short interest, never has been. Now, investors may establish short positions in a security that continue to exist for varying lengths of time, which can result in a short position being represented in one of the data sets but not the other. For example, an investor may sell a security short and purchase shares to close the position on the same trade date. That position would not appear in the short interest data, though the short sale transaction would appear on the short sale volume daily file. On the other hand, an investor may hold a short position open for days or weeks, perhaps as a hedge against another position. While the short sale transaction that established the short position would appear in the short sale volume daily file on the date the short sale transition occurred, the short position would continue to be reflected in the short interest data for as long as the position remained open. Now, this is important. If anything to take away from this video, it's this one right here. Some websites may redistribute the short sale volume daily file and refer to the data as short interest. But this is incorrect because, as explained above, short sale volume data is not the equivalent of short interest. In addition, the specific information that an investor sees depends on the source. This is critical information. Often, the data shown on free investor sites represents the results of a proprietary calculation and not the raw short interest data that FINRA and the exchanges disseminate. So again, I've talked about this for a long time. You don't get a fresh copy of the data when you go through people like Ortex or like Fintel. They are scam artists. They disseminate the data to you and they repackage it and sell it in a way that jacks your tits, such as the cost to borrow, Ortex's daily short interest reporting. It's all bullshit. Now, often the data shown on free investor sites represents the results of a proprietary calculation and not the raw short interest data. Not good. Different data providers may use different methodologies for calculating and displaying short sale information that are beyond FINRA's control. Investors are encouraged to seek information from the data provider to understand how the data displayed is derived. I've been telling you this for months. If you're using any data product, go look where they get their data from so that you make sure you're not getting scammed. Because again, the internet is a place where people will love to take your time and love to take your money, giving you bogus data to jack you over absolutely nothing. So anyways, if you're going to check short interest, don't check anything other than the NYSE listed short interest from FINRA or anything else from the source. And that's short interest. You can't hide it. Where would they hide it? Derivatives? That's next.